Welcome back. It's time for Overlook Stocks. George Tsilis, senior markets correspondent, is here to look at Hertz, which saw a huge rally after Bill Ackman disclosed a big stake in the company. George, welcome. You know, it's interesting. We talked about oil being higher, Bitcoin. We talked about gold being higher, but and Dollar Tree as well. But I missed this big winner here with Hertz up 56% today, and actually Avis was up 4% today as well. Fill us in on the details here.
Well, I mean, this is a special situation. Let's call it that. I mean, earlier today, and this is where the news is a little bit mixed, and so things are still evolving. But essentially, you know, looking at Hertz, we all know it as the rental car company. They include companies like, you know, Dollar Rental and Thrifty Rental, National and Alamo. These are all the brands that are under the Hertz umbrella. And it came out of bankruptcy after it filed for bankruptcy back in 2020 during the pandemic in May of that year. Now, since then, the stock has reemerged as a going concern once again, as a different company in terms of its capital charter or business charter, but it's been drifting to the downside since it became public once again a few years back. And over time, what's happened here is the company is really struggling, both from sales standpoint. They've got depreciation risk of their fleet, and they've got softening demand for rental. And, looking at the last 6 months or so, travel and leisure, particularly in the last 3 months, has been pretty decimated. Also, competition from companies like Uber. So the whole story is the company's struggling. They got about $18 billion in debt to deal with, and lo and behold, Bill Ackman has taken a stake in the company. Now, if you look at the early report this morning, the stake in the company was around 4.1% of the shares, or 12 million shares out of 306 million that are available. One of the things I noticed also is that this company seems to have been issuing debt over the past couple of years and buying back shares. And based on yesterday's close of market capitalization around 1.1 billion, the company's got a tremendous amount of debt, about 18 billion. I mean, if you look at the last year, they generated 9 billion in sales, but they actually lost money on the cost of goods sold. They actually had a negative gross margin of about 200 million because of a one-time charge. So for all intents and purposes, the financials look like they're a mess. And Bill Ackman, Pershing Square, has taken a stake now, earlier reported around 4.1%. But if you look at the stock, it was around, I would say, about 15 or so minutes before the close. It just gapped significantly to the upside, because this is still speculation, but some would state that now, based on special conditions that Bill Ackman has with his filing with the SEC, including some potential swaps, could be debt or equity based swaps or some combination of the two, that his stake is closer to 19 to 20%, which would make him, based on what I saw, the largest shareholder behind Blackstone, which has about 14%.
Interesting. And so they're basically hoping that Ackman's Pershing Square can help turn this company around, because you mentioned the financials. I know that they also had to sell a big portion of their EV fleet to really cut operating costs, but to also better align with customer behavior. I mean, maybe the thought is, we've talked about this before with rental car companies, that if auto tariffs continue and people can't afford to buy cars anymore, maybe they'll be renting them.
Well, I mean, that's quite a possibility. I just think that when it comes down to daily use, for daily use, if I travel, I don't use a rental car, I just take Uber. So I think that's the primary culprit for the rental car business. Now, they've right-sized their fleets. They're cutting their fleets. They're spinning off, and they did take a charge last year, about $3 billion. It could have been part of their electric vehicle fleet divestiture. They took a charge on that. But the company's got a lot of debt. And if you just look at the income, the net interest it spent, the interest it spent on the debt, the cost, it was close to $950 million. And that's alone about 10% of the total sales of the business last year. So for what it's worth, this could be a spin-off story, a debt for equity swap story, or a turnaround story. I think it's interesting because it's changed just in the last 15 minutes, and that's why the stock was trading, I think it was around $4.10. And in the after hours, it hit close to 660, 670. And that's based upon the updated speculation that the stake that Bill Ackman has is quite a bit larger than earlier reported in the pre-market.
Okay. All right. Just quickly, George, is Hertz still a meme stock? Because it used to be, right? And then it reemerged from bankruptcy. Do we still consider it a meme stock? Because GameStop and AMC weren't higher today.
Well, I mean, so yeah, it was a meme stock. It certainly could be once again. I think what we're seeing here is still a little bit of confusion, but there's also a rush to buy because of the smart market capitalization. Obviously, it's significantly increased since yesterday, but it was only about 1.1 billion yesterday. This is a huge catalyst, and also about 18% of the shares in the free float are shorted. So a bit of a short squeeze going on as well, perhaps a meme thesis behind it as well.
Okay. All right. We'll leave it there. George Tsilis, can always count on you to bring us some overlooked stocks here.